Good morning and welcome. You are watching Market Cafe on ET Now. I'm Nupur and with me is Ankita, and together we're going to be taking you through what's making news in the US markets as well as Asia opens up. Let's begin, of course, with taking a look at what's happened overnight in the US. Now, US stock futures seem to have ticked higher on Tuesday after the major indices kicked off the week on solid gains supported by falling oil prices and a strong rally in heavyweight technology stocks. However, oil right now, of course, inching up further once again over uncertainty of what's happening with those stocks. Now, let's go have a look now at Monday's regular trading session. The tech-heavy Nasdaq Composite surged about 2.13%, while the S&P 500 and the Dow advanced about 1.48% and 1.32% respectively. Now, mega cap technology stocks have driven the gains, with Amazon soaring 4.6% to surpass the 3 trillion market cap for the first time. Now, other standout performers, of course, have included Microsoft, Nvidia, Meta Platforms, Alphabet, and Tesla. Attention now turns to another round of corporate earnings today, including results from SpaceX, AMD, Caterpillar, Merck, McDonald's, amongst others. So also, Ankita, take us through what's happening on the crude prices. Of course, you know, they're inching up slowly again.
Yes, that's right, Nupur. We did see that cool-off come in, but right now the talks are very uncertain as far as US-Iran talks are concerned, and on account of that, we do see a bit of a comeback that the oil prices are making, though we are still trading below the $85 per barrel on the Brent, but we are seeing an uptick of almost 0.8% on Brent, and that is trading up at $84.49 a barrel, and WTI is also up 0.7% at $80.97 a barrel. So a slight rebound on the oil prices is what we are witnessing right now. Let's take a look at the Asian markets and how that is shaping up. We do see Asian markets that is in the red, barring S&P 200. That's the only one that's seeing a shoot of green there. 1% uptick coming in, but Nikkei is down 0.5%. Now remember the intervention on the yen by the US, and we do still see Nikkei trading down with cuts of 0.5%, 360-point downtick on Nikkei. Hang Seng is also down 0.5%. Shanghai is absolutely flat right now, though in the red, with cuts of just 2 odd points. So, and look at the implied start in Nifty also, very muted, flat start after yesterday's rally is what we are penciling in on the Nifty as well, a downtick of just 8 odd points on the start for Nifty. But let's talk about the geopolitics. US President Donald Trump says that talks with Iran are underway, calling them Tehran's last chance to reach a deal on denuclearization and the Strait of Hormuz, despite Iran denying direct negotiations with Washington. Tehran says it is only holding talks with Oman on Hormuz. Even as diplomacy gathers pace, shipping risks remain elevated after an explosion was reported near the strait. Listen to what Trump had to say about this.
The talks are going along. We're going to hit them very hard yesterday, very, very hard, harder than any attack. I think I can say, General, from a point of knowledge, any attack since World War II. That's pretty big. And we were set to go, and they called. And in addition, Saudi Arabia called, and UAE called, Qatar called. I called some numerous people. I don't want to use the word begging, but some were, in particular, Iran did not want to be hit. And they said, we want to talk. We want to talk about the strait, but more importantly, from my standpoint, we want to talk about the denuclearization of Iran.
All right, and sticking to news coming in from the US, Donald Trump has criticized ExxonMobil and Chevron for profiting from higher oil prices during the Iran conflict, saying that companies made too much money from supply disruptions. Now, Trump has urged oil majors to pass some of those gains to consumers by cutting retail fuel prices. Now, the comments come after both companies have reported windfall quarterly profits.
And a fresh legal challenge to Trump tariffs policy. A coalition of 25 Democratic-led states have sued the Trump administration over its latest global tariffs on imports from 60 trading partners. The states argue the administration is using Section 301 of the Trade Act to effectively revive the sweeping tariffs that were already rejected by the U.S. courts. They are seeking to block the new duties, overturn them, and secure refunds for tariffs already paid, setting up another major courtroom battle over Trump's trade agenda.
Now, U.S. Treasury Secretary Scott Bessent has urged the Federal Reserve to expand its FEMA repo facility after the US joined Japan in a rare coordinated intervention to support the yen. Now, the facility allows foreign central banks to access dollar liquidity without selling US treasuries, while Treasury-Fed coordination during market stress is not unusual. Analysts say it's highly unusual for a Treasury Secretary to publicly press the Fed to change one of its policy tools.
And New York Fed President John Williams says that he still expects U.S. inflation to ease gradually, with the Fed's 2% target achievable by 2028. While he believes the current policy is well positioned, Williams made it clear that the Fed will raise interest rates if the inflation falls too slow. He also backed the week's decision to keep the rates unchanged and said he sees no major financial stability risks from the ongoing AI investment boom.
And Amazon has crossed the $3 trillion market value mark for the first time, becoming only the fifth company to reach that milestone. The rally follows a blockbuster earnings report, with AWS delivering its strongest growth in over 4 years, reinforcing confidence that AI-driven cloud demand remains robust.
And Palantir shares surged 12% in after-hour trade after the AI software company delivered a blockbuster second quarter. Revenue jumped 93% on a year-on-year basis, comfortably beating the estimates, while adjusted earnings also topped the expectations. The standout was the US commercial business, whereas the revenue soared 149%, prompting the company to raise both its 2026 commercial revenue outlook and full-year revenue guidance.
All right, let's look at what's happening back home now. And something that could have a significant effect is the IMD forecasting below normal rainfall for August, with precipitation likely to remain below 94% of the long period average. Now, it also expects below normal rainfall for the second half of the southwest monsoon. And Akansha is with us, will be taking us through that. So, hi, Akansha. Good morning. Tell us what you're hearing from the IMD.
That's right. The India Meteorological Department has forecast below normal rainfall for the month of August, with rainfall expected to be less than 94% of the long period average. In fact, the IMD has also projected below normal rainfall for the second half of the southwest monsoon season, that is August and September. Meanwhile, weather activity is expected to remain intense across several parts of the country. The IMD has forecast extremely heavy rainfall over Assam, Meghalaya and sub-Himalaya West Bengal and Sikkim as well. At the same time, heavy to very heavy rainfall is likely over Arunachal Pradesh, Bihar, Himachal Pradesh, Kerala, Madhya Pradesh, Odisha, Rajasthan, Uttarakhand and coastal Karnataka. Now, there's some positive news for Mumbai. The city's 7 reservoirs have now reached 90.06% of their total live storage capacity as of 3rd of August. Meanwhile, if we look at the latest monsoon deficit numbers released by IMD, so as of 3rd August, East and Northeast India continues to report the highest rainfall deficit at 29%, followed by South Peninsula at 19%. Northwest India has a 13% deficit, while Central India has now moved into a surplus of 4% above normal deficit. So overall, India's cumulative monsoon deficit has narrowed down to just 12% as of August 3, which indicates a gradual improvement in country's monsoon performance.
And the centre has raised windfall taxes on exports of diesel and aviation fuel as global oil prices continue to remain rather volatile. My colleague Kuldeep is now joining us with the details.
Well, the government has revised windfall gain tax on exports of petrol, diesel and aviation turbine fuel for the fortnight effective 1st of August. The export duty on petrol has been increased to 3.5 rupees per litre, while the export duty on diesel has been increased to 25.5 rupees per litre, and this also include RIC of 1.5 rupees per litre. The export duty on aviation turbine fuel has been increased to rupees 22 per litre. Well, we must tell viewers here that the government introduced windfall gain tax on petroleum products on 27th of the March to ensure domestic availability of petroleum products in the backdrop of West Asia crisis. Now, the government revises these duties on every fortnight.
And after the 200-point rally on the Nifty during the revised SEBI framework, the NSE has said the first day of closing auction session or CAS on normal operations, with participation expected to deepen over the coming sessions. Now, the BSE has also said that it was completed smoothly, with over 400 trading members participating across more than 200 stocks. Ankur is joining in with the details. So, hi, Ankur. Give us more on this one, please.
The sudden price movement in the first day of CAS has been point of debate, and the statement which has now come through exchanges confirmed it in our news break that there has not been any kind of glitch in the exchanges, but it was the orders that came on the first day. For instance, NSE has said that different stock closing prices across exchanges has happened because separate order book has been maintained for closing auction session. It also adds that index values can also differ as they are derived from exchange specific closing prices of the constituent stocks, and therefore you would see that there was divergence between the prices of Sensex as well as Nifty closing, which happened on Monday. In fact, NSE has also specified that 515 trading members have actually participated, and if you look at the overall data, the turnover has been 1,277 crore on day one. On the other hand, even BSE has said that it had more than 400 trading members who participated over 200 scripts, and it is saying that it has actually successfully completed the first day of CAS, which means there was no problem on the exchanges side, and hence divergence happened. The expectation from the market and even the exchanges now confirm that in the run-up of the implementation of CAS, the expectation is that there will be more participation, and hence a fair price discovery can happen through closing auction session, which was the intent behind the application of CAS.
And margin trading facility, or the MTF exposure, has climbed to a record 1.37 lakh crores, highlighting strong leveraged participation in the market. Increasingly, the data shows the investors have been adding leverage during the market declines while trimming positions into the rallies. What does this really mean? Well, my colleague Mitali is now joining us with an explainer.
Right, so if you see India's margin funding book, that is at record high levels as of July 30th, 2026, and data compiled till date, it shows that investors, they still continue to increase their leverage at times when markets have not performed well or have in the declining trend, while reducing that exposure in times when Nifty 500 was rallying, in particular those days. Let's have a closer look at it. Now, the outstanding margin trading facility, or the MTF book, it stands at record high of 1.38 lakh odd crore rupees as of July 30th, 2026. And it has more than doubled from the levels of 69,000 odd lakh crore rupees in the month of April last year, that you see, highlighting that the sharp up build-up that we have seen in these leveraged position over the past 15 months. What's striking is that the leverage, it continues to build even when the broader markets are under pressure. And between January to July this year, we have extrapolated the data on a daily basis when the markets have declined, but the leverage position, on the other hand, has actually grown up. And interestingly, the opposite trend has also been seen when the market might have rallied 1 to 4%, but at those times, the leverage positions, the margin trading book, it has actually declined. And if you see on a sector-wise basis, the private sector banks, civil construction, software and consulting, pharmaceutical, aerospace, and all these companies, all these industries and sectors, they remained dominating with the dominating position in the MTF book. While on a stock level basis, if you see, so stocks like HDFC Bank, Reliance Industries, Infosys, BSE, L&T, SBI, MCX, Paisalo, and Adani Power, Hindalco, all these stocks are the one which have the highest margin trading books in front of those names. So yes, an opposite trend being seen by the investors, while at the time when the markets are in the rallying mode, they continue to deleverage their position, and at the time when the markets are declining, these books are seen to trend high. So that's one take coming in for margin trading facilities as of now.
Mithali, do stay with us. In fact, now the government has also launched a stake sale in LIC, offering to divest a 2.5% stake with a green shoe option of up to 4%. Now taking that total offer size really to about 6.5%. And Paytm investors have also launched a block deal of up to 1.49 crore shares. So, Mithali, I believe you have details on that one too. So, do tell us.
Right, so two major dominant players which will have the investors focused today, that is first LIC and also Paytm. So LIC's offer for sale that is announced by the government, while a large block deal is also being witnessed for Paytm. The government has launched this offer for sale for LIC at a floor price of nearly 382 per share, which is at a 10.75% discount if you see from the last closing price. The base offers is 2.5% of the equity, which totals up to nearly 12,000 odd crore rupees. While if you include the green shoe option, that particular sum up comes to around 31,400 crore rupees, making it one of the largest OFS transactions ever happened in India's capital market history. At the floor price, LIC's implied market cap stands at around 4.84 lakh crore rupees compared to its current market value of 5.42 lakh crore rupees, and against the estimated FY26 enterprise value, if you see, of 8.33 lakh crore rupees, the stock is effectively being offered at a price to enterprise value at just 0.58 times. Now, this attractive valuation and the steep discount, they are expected to drive strong institutional demand as well as the retailers, investors' demand, although the markets will closely watch as to how the offer for sale and the subscriptions roll out. Now, talking about Paytm, so it is in focus as existing investors. They plan to sell up to 1.49 crore rupees or 1.49 crore shares through a block deal. The floor price has been set at 1,339 rupees per share, implying a 19% discount from the last closing price. The sellers, they are included CEF Partners, CEF 3 Mauritius and Elevation Capital, Morgan Stanley managing the transaction. This move comes after Paytm shares have rallied more than 15% in the past month, suggesting that the early investors are now capitalizing their gains. And given the size of the block deal, investors will have a close watch at this as well as LIC's offer for sale. Back to you.
All right, let's also talk about the primary market, and it's going to be a busy day on the primary market front as Misho is all set for a large block deal at a 5% discount to market price. Meanwhile, even Arvind has launched its QIP with a floor price of 518 per share. Unimech and Samhi Hotels are also approved for a 750 crore fundraise each, and Shesha is now joining us with the details of this.
Well, yes, let's first start with Arvind, where the board of directors have said that the QIP has now opened. They've launched the QIP. The floor price has been fixed at 518 rupees per share. This implies a discount of about 2% as compared to yesterday's closing price. And this is a 500 crore QIP. That's a 500 crore fundraise that the company is looking to do. Unimech Aerospace, meanwhile, the company has said that they've approved raising 750 crore via QIP. There are no other details as of now, but 750 crore, that's the quantum that the company is looking to raise. Let's also talk about Samhi Hotels then. Over here, the board has approved to raise about 750 crore through equity or non-convertible debentures. The company also said that the funds may be raised via QIP, preferential issue, private placement or any other route. And this will be to support expansion, acquisition and strengthen their balance sheet position. So Samhi Hotels, Unimech and Arvind Limited, all of these will be in focus on the back of their fundraising plans.
All right, Ashesha, thank you very much for joining us on that one. Now, let's move on to KEI Industries, and it's been a strong quarter earnings for them as the EBITDA and margins have hit record highs during the quarter. And Rabindra is joining us with all of that. So, morning, Rabindra. How is it looking like? The revenue in line, PAT beating expectations, and so is EBITDA.
Well, yes, good morning. KEI Industries reported an overall strong set of number in Q1 FY27. Company's revenue came in line with the street estimate, while all other metrics was above the street estimate. If we talk about the revenue, then revenue rose 23% on a yearly basis at rupees 3,185 crore. which was driven by broad-based demand in wires and cables business and a balanced performance across segment. Company's net profit has also rose by 40% on a yearly basis, and EBITDA has also rose 53%, significantly outpacing the revenue growth and reflecting a strong operational performance. And company's EBITDA margin is at a record high of 12.4%, and margin expansion was driven by better operating efficiency, a favorable product mix, and a strong revenue growth. And if we talk about the wires and cable segment growth, then domestic wires and cable revenue grew by 23% on a yearly basis. But on the export front, company's wires and cable export revenue declined by 7.3% due to disruption in the West Asia crisis. And in the Q4 of FY26, Concall management has guided that FY27 volume growth will be 17 to 18% and EBITDA margin guidance of 10.5 to 11%, with the Sanand plant expected to be fully utilized, and volume growth is likely to improve to around 20% in FY28. And the company also expects revenue growth to exceed 30%. So overall, it was a strong strong quarter for the KEI industry.
All right, Rabindra, thank you so much for joining us with that. But also, let's shed some spotlight on DLF after it reported a mixed first quarter with revenue and EBITDA declining sharply on a high base and delayed project execution. My colleague Rabindra is joining us yet again with the contours of that.
Well, it was a weak quarter for the DLF in the quarter gone by. Company reported a weak set of number and missed all the estimate in all metrics, and revenue declined by 53% on a yearly basis, primarily due to high base in the corresponding quarter last year and a delayed project execution. And net profit rose 4% on a yearly basis, which was supported by 23% increase in other income, which helped offset the weak operating performance. And meanwhile, finance cost has also sharply risen to 78% on a yearly basis. However, company's EBITDA fell 59% on a yearly basis, and the decline was largely driven by lower revenue and 22% increase in employee cost, with weigh on the financials of the company. And on the operational front, also pre-sales declined by 94% on a yearly basis, significantly below estimate. And the sharp fall in pre-sales was mainly due to absence of major project launches during the quarter and high base in Q1 FY26 when the company successfully launched Pirvana North, which has boosted the pre-sales in the Q1 FY26. And against his FY27 guidance, company has given a guidance of pre-sales of rupees 20,000 crore for the FY27, and DLF has achieved only 3.3% in the first quarter, making the launch critical for the remaining of financial year. So overall, it was a weak quarter for the DLF.
Right, Rabindra, thank you very much for joining us with all those details. And in fact, Ashesha is back with us, and this time she's going to be taking us through all the stocks and news. So, Ashesha, give it away.
Well, yes, first up, let's start with KEC International, where the company has said that they've won orders worth about 1,063 crores across several businesses. Keep an eye out on KEC International on the back of their order win. Meanwhile, Praj Industries will also be in focus, and there's a positive development over here. Company's wholly owned subsidiary, Praj GenX, has signed an exclusive global framework supply agreement with a global EPC company for hyperscale data center business. So this is a new and a fresh development that has come in for a company, a positive one, which is why the stock will be in focus today. UPL, the counter, reported its numbers yesterday during market hours, but the CEO of UPL Corporation, Mike Frank, has now resigned. Keep an eye out on this one as well. Jupiter Wagons, meanwhile, has signed a strategic partnership with an Italian company, and this aims to establish India's fully integrated private sector rail wheel manufacturing platform for railways, axles and wheel sets. So a positive development that has come in for this counter as well. Lastly, let's talk about PN Gadgil, because the 700 crore QIP has now ended. The issue price has been fixed at 609 rupees per share. Keep an eye out on this counter as well.
All right, Ashesha, thank you so much for joining us. But we are also joined by Darshita, who's joining us with another list of stocks that will remain in focus. Darshita, tell us what's your list.
Right, let's take a look at stocks that could remain in focus today. And starting off first with SBI Funds, where it was a largely steady quarter. Average assets and revenue both grew about 1% on a sequential basis, and the yield remained stable. So overall, there were no major surprises. Moving on next to Restaurant Brand Asia, which delivered a standout quarter. Same-store sales growth came in at 12.6%, which was highest in the last 15 quarters. The company also raised its gross margin guidance, with its India business posted its highest ever quarterly revenue of 680 crore rupee, highlighting strong demand and execution. Sambhav Steel also reported a solid performance with revenue and EBITDA both growing 30% on a YOY basis with margins improving slightly. Kansai Paints posted a healthy quarter as well with 10% of the revenue growth, steady margins and EBITDA both broadly in line with sales. On the flip side, Texmaco reported a weak quarter with both revenue and EBITDA declining in double digits, reflecting operational pressure. GE Shipping was among the key outperformers, where the revenue surged 67% on a year-on-year basis, while EBITDA margins expanded sharply, coming at nearly 67%, indicating a significant improvement in profitability. Gulf Oil delivered another consistent quarter with revenue and EBITDA both growing 31%, while margins remained stable. And finally, Inex India reported a mixed set of numbers, where the revenue did grow, but it came below to what the street was estimating, while the profit declined 5% on a year-on-year basis, making it a relatively weaker quarter overall for the company.
All right, Darshita, thank you very much for that. We'll be sure to keep an eye on all those stocks. But thank you for joining us. And the markets looked very good yesterday. Let's hope the trend continues. It's a goodbye from Ankita and me.